Today, we're going to talk about the last chapter on internal control, which is chapter 12, with control risk and reporting on internal control. So we'll talk first of all about assessing control risk, how the auditor does that. We know that control risk is the risk that material error is not prevented and or detected by internal control. So if control risk is high, that's a bad thing. Probably the client's financial statements have some misstatements in them. The auditor is going to have to do more work. If control risk is low, probably those financial statements do not have at least as many material misstatements in them. The auditor can do less work because internal control is working. Then we'll talk about reporting on internal control, the so-called 404 report once again. So let me go ahead and share my screen with you if you're here online. Again, chapter 12. And for those of you here in class, chapter 12 is on the handout I gave you, starting with chapter 10. Does anybody still need a copy? All set? Okay. Now, let's talk about how we go about studying and evaluating internal control first, and again with the objective of assessing control risk. So you can glance, if you want, at figure 1211 on page 391. It depicts this, but you may like my verbal description more. Figure 1211 is sort of a funny flow chart there. It's not a very good one, to tell you the truth. Well, my description is going to concern non-issuers. And remember that auditors of issuers perform some additional work in order to issue the 404 reports. So with an audit of an issuer, they've got to do more work. They've got to gather more evidence. Basically, they're going to do more of the same, but much more in depth. They'll kick it up several notches. For an issuer, not as much. Because for an issuer, we will not issue the 404 report. We're only studying internal control for an issuer to assess control risk. That's our only objective. Now, let's think about some steps the auditor has to go through here. Well, first of all, the auditor must obtain and document an understanding of the internal control design and operation. So, design of internal control is how good it looks on the books, how well it's designed, how it should work in theory. And it's important to have sound design for internal control. But that doesn't make much of a difference unless we see it carried out at day-to-day operations. So we will be looking at both the design and the operation of internal control. Day-to-day operation means how the users of internal control go about utilizing it. Do they do a good job or not? For example, if the design of internal control is such that we tell users they should not be sharing passwords, but in practicality, we go in the office and we see they're doing what? Sharing passwords. Maybe some of them have the passwords written on little yellow Post-it notes and pasted where? Yeah, on the desk, right on the computer screen. So even though internal control looked good in theory, in other words, the design of internal control is okay, in everyday operations, not okay, because these employees didn't carry it out properly. Well, the auditor is going to assess obtain a preliminary understanding of the client's internal control structure through conducting procedures to obtain an understanding of internal control. We've talked about them before, but quick and easy ways of getting acquainted with internal control. We usually do these at the start of the audit so that we know where problems with internal control may lie And so that we have a preliminary assessment of control risk. Well, these will consist of inquiry of client personnel, review of the client's policies and procedures manual, observation of activities, and inspection of documents. So if we inspect documents and we find that credit is not approved for credit sales, even though the design of internal control says it should be, well, maybe that design of internal control was okay. Once again, the day-to-day operations of internal control were not. So this document, this understanding can be documented in a variety of ways. Could be in flow charts, could be in narratives, glance them when you have a chance, internal control matrices, internal control questionnaires. By the way, the internal control questionnaires have a pre-prepared format. The client can help you complete it. It asks a variety of questions about internal control, and hopefully you get honest answers, but maybe not. So it's a start, but then we have to back it up with more reliable evidence. Well, the auditor is going to be concerned with identifying specific controls and weaknesses. And once again, weakness may either be a lack of any control, which is related to the design of internal control. So there's a design shortcoming, or when existing control is not working, which is related to the operation of internal control. That's when those employees are trained passwords. And the auditor is also going to identify excuse me, related misstatements which can occur. So, for example, if we find that in day-to-day operations, employees are sloppy about approving credit for credit sales, one misstatement we will expect will be uncollectible accounts receivable, which may not be written off. Now, based on this, the auditor is going to assess a preliminary value for control risk as a result of his or her preliminary understanding of internal control. So just a tentative value for control risk. And we can remember that the maximum value for control risk is 1 or 100%. And if the auditors decide upon a preliminary value of control risk below 1, must corroborate that through test controls, we'll see them below, and then decide upon a final value for control risk. And the auditor's preliminary understanding will be a lot quicker to complete if he or she has previously audited the client, pardon me, or if there have been no major changes in internal control. So the preliminary understanding would instead focus on updating the auditor's knowledge. So that's one of the beauties. If we've already audited this client before, we know about the client. We've been through the learning curve. So we would just concentrate on changes which may affect internal control. For example, if an older, long-time, knowledgeable employee retired and someone new came in, what kind of trouble might that spell? Somebody doesn't know what they're doing. Could be. Or if there's new software, employees have to get to learn it. Will there be glitches? Oh, yes, we know all about technical issues, don't we? Here at the pandemic. Now let's see. The auditor is going to assess whether internal control is sufficient to allow the financial statements to be audited. And the answer is yes in almost every case. But if not, the auditor is either going to withdraw or disclaim an opinion. That's a scope limitation. Hopefully we would have found out about this fatal flaw back at client acceptance, and we would have rejected this client. But if we didn't find out about it then, now it's time to reject the client. Technically, we could say we have scope limitation, issue a disclaimer of opinion. That would be even rarer. So usually withdraw from the client, although I hope we never run into this problem. Now, let's assume that this auditor said, okay, we can go ahead with this client. Oh, I'm sorry, partner. If no one wants, then they've got such problems, it's probably going to be moot. So they're probably going to have to step down to a review instead. If they're publicly traded, they have to have an audit. But the SEC, when they see that these problems exist, will be very user unfriendly and they might delist their stock. Oh, yeah. It's a spin trade. It can get nasty. But generally, like I said, points going to be moved because by the time the client is declined that much, well, they probably can't afford not. And also, they probably cannot get proper documentation together for an audit. So it's probably going to be a review because they're spiraling. Unfortunately. You betcha. Anything else so far? So now this auditor said, okay, I can audit the client. There's sufficient internal control. We now have two different scenarios to face. We'll address them both. First of all, we'll address the scenario of where the auditor's preliminary assessment of control risk is 100%. And second, where we think the preliminary value can be below 100%. Well, I said preliminary value. We're going to have to come up with a final value of control risk, of course. So let's see about this preliminary value. Well, the auditor decide upon a control risk of 1, and again, a preliminary value. Here she is going to omit test controls and instead perform expanded substantive tests, especially tests of details. Well, let's see why the auditor may have decided upon that. First of all, he or she may have decided upon a control risk of 1 because internal control is not effective. That means internal control is too bad to rely on to prevent and or detect misstatements, so the accounts may be materially misstated. So that's the obvious thing. The obvious issue that normally goes on. So internal control is just too bad to rely on, even though it exists. So we're going to say the control risk is maximum, 100%. So that means the client's financial statements are almost surely going to contain material misstatements, and we're going to conduct the maximum amount of substantive testing, gather the maximum amount of audit evidence. Because again, those financial statements are probably misstated. We've got to do a lot of work to get the bugs out, to say the least. So that's a very obvious thing which could go on. Now, something that is somewhat less obvious, maybe a lot less obvious. This auditor may have also set control risk at 1 or 100% because the cost of conducting test controls exceed the expected decrease in substantive tests, which may result, even though internal control appears to be effective. And this case for many small clients, for example. So for a small client, it may be cheaper to do what auditors sometimes refer to as a full-blown substantive audit, instead of trying to test the rather rudimentary internal control that the small client has. So if we have a small client like heating air conditioning, where they had Judy Holter doing just about everything, well, internal control is too rudimentary. Instead, let's just go straight toward expanded substantive testing. So this small client, with cash, we can count any currency they have on hand. We can confirm any cash on account with the bank. How many banks they probably do business with? 1 or 2. Yeah. We'll confirm it all. So we can all cash very completely. Accounts receivable, maybe they have none if they're using external credit cards. Or for the ones they have, maybe we can audit them completely or just about completely, such as by sending out confirmations. When it comes to inventory, maybe they don't have that much, we can count it all. Or maybe it's a service company in the services sector. If so, there's no inventory. So on it goes, we do this full-blown substantive audit. And that may be a whole lot more efficient and cheaper than trying to test that rudimentary internal control. Does that make sense? Now just reading on. If the client has extensive electronic evidence, though, this may be possible. This may not be possible, pardon me, as the auditor needs to audit through IT. Generally, though, for a small client like this, they will not have an extensive IT operation. So usually that's not necessary. Also, we bear in mind this is not possible for an issuer, as the SEC requires a 404 report. How many issuers do you think are this small? They're not, no. So that point's kind of moot. I just have to bring those up because they're in the auditing standards. And number 3, note that even if control risk is 1 or 100% because internal control is bad, the auditor can still issue a clean opinion if the client corrects any resulting material misstatements. So control risk is that maximum 100%. It's bad. Well, let's say the client cleans things up in the way of mistakes. We can still go ahead and issue a clean audit opinion on the financial statements because, well, everything's been corrected. They're now fairly stated in accordance with GAAP in all material respects. We may not be able to issue a clean 404 report on internal control if they're an issuer, but at least we can issue a clean audit report on the financial statements themselves. Does that make sense? Well, now in E. Second scenario here. If the auditor decides the control risk can be less than 1, less than that maximum default value of 100%, that is, he or she must conduct test controls in order to document a final value of control risk. So this preliminary value of control risk, we think is less than 100%. We've got to prove why. And then we'll arrive at a final value of control risk. Here's how we prove why. We will conduct test controls. So we'll conduct tests to make sure internal control is working along the way. And there are 4 types of test controls. Inquiries of appropriate client personnel, inspection of documents, records and reports, type of documentation, observation of control-related activities, and reperformance of internal control-related procedures, including walking through individual transactions. It's also a good way to obtain an understanding of the internal control system. Just like our auditors walk through a whole bunch of individual student records for financial aid, they make sure that good internal controls followed to each step of the way. By the way, the Department of Education requires good internal control of colleges and universities. That's to prevent, hopefully, material misstatements from happening. And if you don't have proper internal control, but you just lucked out, you have no material misstatements right now, Department of Education still won't be pleased because they'll see in the future, you can have problems. Yeah, by the way, with observation of control related activities, we can watch employees do their jobs, make sure that yes, indeed, they follow internal control. With examination of documents, records, and reports, we can look for things such as this, such as for credit sales approval, look for a credit approval number on sales documents, or in a manual system, somebody's initials indicate. And finally, back up to inquiries. That's where we ask client personnel, how'd you go about doing this job? How'd you approve credit, etc.? And we may get a very honest answer there. Maybe not. That's why we always have to back up inquiry with more reliable substantive evidence. But inquiry is a really good start. We may have gotten the absolute lowdown. It may be totally accurate. Sometimes disgruntled employees will give the lowdown. Then even though it's in chapter 13, we'll get into it there, but chapter 13, or table 13.1, illustrates some test controls. Once we know what the control is, it's easy to formulate a test control. Just like if the internal control is the credit must be approved for credit sales, well, to test that, we can rely on documentation. We can look at sales documents and again, make sure there's a credit approval number on each one or someone's initials. That's how we would do it. Again, once we know that internal control to approve credit sales, we know how to test that. Check for evidence on each document that yes, indeed, credit was approved. If we find a document with no approval, internal control has just been violated. Well, the extent of test controls may be affected by last year's audit, because last year we probably have a good indication of what internal control is going to be like this year. Maybe able to get by with not conducting as many test controls. And also by whether the auditor is able to assess the entire audit period or not. If we cannot test the entire audit period, that may mean that we have a scope limitation. Because after all, internal control may have been working back earlier last year when that valued employee was still around. And then once that person was replaced with somebody new who didn't know what they were doing, control risk being one. So we've got to be able to make a statement about the year in total. Otherwise, again, could be a scope limitation. Well, then number 3, practically as the assessed level of control risk gets lower, often the auditor must perform more test controls. So the assessed level of control risk, the lower and lower and lower it gets, that means internal control is working better and better and better. We've got to prove why. So conduct more test controls. Any questions so far? All righty. Well, then if the auditor can decide upon the final value of control risk once he or she has completed test controls. And if internal control is effective, then the final value of control risk will be less than 1 and substantive tests can be reduced. Great, internal control is working. We made that final conclusion. So this because there's some assurance the accounts are fairly stated. So therefore, probably financial statements are okay. But control risk will be 1, of course, if tests of controls show that internal control is not effective. The auditor would then expand substantive tests back to the maximum amount. So if we find control risk is 100%, a final value that is, we've got trouble. We've got an expensive audit on our hands. How many clients do you think want that? No. Well, you know, if they didn't bother making sure they had good internal control, they're going to suffer the consequences. Plus, not only a higher audit bill, but the probability of loss on a day-to-day basis is much, 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 much greater. So in that case, they need to definitely institute better internal control. They just don't realize how much they're losing sometimes. Just like Mr. Payne at the Payne Air Conditioning, not realizing how much Judy Holter was stealing. By the way, as I drove to campus yesterday, one of their vans was coming up Cleveland Heights, and this driver was really going fast and coming in and out of traffic. So finally caught up with him, and well, there were two guys in there. The driver just looked like, he couldn't have cared less. So I was thinking, maybe I should give Mr. Payne a call. I took a picture of the driver's license plate. Yeah, maybe I should give Mr. Payne a call. And if I do, I really should, you're right, because it's a problem. And there on Cleveland Heights is narrow. Oh, also, he was in the left lane and he swerved over to the right. I got really close to the car on the right. So just below Lake Hollingsworth, yes. I don't know if Payne Air Conditioning does have GPS. Because it probably just don't have the internal control still. And that would be a part of internal control. That's good internal control procedure. Yeah, but I know about one time yesterday, just before 4 o'clock in the afternoon, and hopefully we could still figure it out. And I know the description of the guy. Probably 35, 40, dark hair, beard. They'll probably figure it out. And I guess if I really want to be mean, I could say, I realize you don't have good internal control. How do I realize that? I know who Judy Holcher is and what she did. How your poor internal control allowed you to get by. What not to do. You betcha. What not to do. And you're lucky that they don't work for you, because they can figure out your shortcomings and internal control very quickly, and they could steal from you. Yes. But as you go along, well, it's a good thing we're honest. I know you're honest. But it's a good thing we're honest counts, because you're wrong, you're going to find you can identify shortcomings in internal control. Okay, figure out how to work that system. So, yeah, it's just a really good thing we're all honest enough. Most counts. Some I wonder what Mr. Payne would think if I brought up Judy Holcher's name.
At this point, you're not too bad.
Hey, that's a good point. Yes. Yes, as I get older, I care less and less what people think. Yeah, you're finding that too. Yeah. Okay. Oh, maybe Mr. Payne would thank me and give me a discount off air conditioning service next time. I do use this company at home.
Are you going to do it?
Yeah, I will. I will. You've inspired me. Yeah, because it'd be pretty hard to teach about good internal control and then not help a small business with their internal control, right? One I know has already been ripped off. Major. We'll look up Judy Holcher here a little bit. Well, and gee, just remember that test controls are often performed at the same time as substantive tests of transactions, and that's called dual purpose testing. So just, we've said before, if we have a sample of sales documents pulled, we can check to make sure they were posted correctly, trace them to the sales journal, in other words. That's the substantive test of transactions part, dealing with dollars. At the same time, we can look for that credit approval number. There's the test control. A test control does not directly deal with monetary amounts. A substantive test does. So that's how we always know the difference. But often we just combine them, dual purpose testing, more efficient. So if thus any real savings will be in test of details, that's okay. They're usually the most expensive type of audit test anyway. And both test controls and substantive test transactions are often called tests of transactions because again, we're testing one individual transaction at a time. Then H, always remember that unless we conduct test controls, we must set control risk 100% and therefore conduct the maximum amount of substantive tests. And again, this would be appropriate for clients whose internal control is too bad to rely on, or for clients where we decided the cost of test controls would not be offset by the reduction in substantive tests, just like that small client. Well, then the auditor must identify deficiencies or significant deficiencies and also material weaknesses in internal control. There's a difference between those three. We need to know what those differences are. And first of all, what will this involve? Well, we'll identify the existing controls. We'll identify the absence of any key controls which are needed. For example, if they don't have a procedure in place to approve credit, shame on them. Or if they have duties combined in one employee, which should be segregated, there's lack of a key control too. Then third, we'll consider the possibility of compensating controls. Just like in a small business, we've seen if the owner is involved in day-to-day operations, the owner is going to make sure things go right. I should say day-to-day operations of financial matters. Unfortunately, Mr. Payne was not. So he trusted Judy to do it all. And what did Judy do? She stole as a result. That was his consequence for his carelessness. Yes. Like I said, we'll look her up in a moment. Well, then, any problems we find with internal control, we're going to identify as deficiencies or significant deficiencies or material weaknesses. As you can guess, as we go along that sentence, things get worse. So let's see what these are. First of all, deficiency exists if the design or operation of controls does not permit company personnel to prevent or detect misstatements on a timely basis. So a deficiency, it's a problem. But let's say that problem gets bigger. Then we have second here, a significant deficiency. And that's a deficiency or a combination of deficiencies in internal control that is less severe than material weakness, yet important enough to bear attention by those charged with governance, like the audit committee, like senior management. So significant deficiency is worse. Well, then, let's say things get worse still. We've got number 3 here, a material weakness. It's deficiency or combination of deficiencies in internal control, such that there is a reasonable possibility the material misstatement of the entity's financial statements will not be prevented or detected and corrected on a timely basis. Another comment here, something about that. So a material weakness, we're pretty sure that's going to affect the financial statements. By the way, here at Florida Southern, our auditors always go over the distinction between these 3 different types of problems. Guess what? We've never had significant deficiency or material weakness. So we're in good shape. But they still have to tell us what those are, just so that we'll know. And also so that we can agree that if they find just a deficiency, that we agree it is a deficiency, is not anything worse. That's part of our governance. Well, then Ooh, that should be little Roman numeral 4. Whoops. Words automatic outline feature sometimes it's not so great. Reverts to 3. Okay. Now, okay, well, I stopped automatically creating the list. This doesn't mess up. Sometimes it's difficult to figure out formatting things, at least it's for me on Word. Oh, shoot. Yeah, I'll fill with it later. All right, so these two worst things, significant deficiencies and material weaknesses, again, must be reported in writing into management and those charged with governance in the company. And we have an illustrative letter to communicate significant deficiencies and material weaknesses in figure 12.6 on page 383. We'll go there in a second. And by the way, deficiencies, which are less than significant, may be reported in the management letter. So those relatively small things may be reported in something called the management letter. We'll see it in chapter 24, which is just a couple of chapters down the road actually for us, because I skip ahead to that chapter. Well, the management letter is optional. It's written from the auditor to management, and it contains suggestions to improve operations. One very common suggestion, in fact, probably the most common one, are internal control deficiencies. So we really recommend that you fix these deficiencies. They're not causing you a lot of trouble right now, but if you don't fix them, what might just happen in the future? They'll come back to bite you. Oh, by the way, before I go to the book, number 5 will also determine potential misstatements which could occur. All right, let me go to page 383 here. Oh, by the way, anytime you need this document, the stop, look, and listen thing, the registrar posts this every semester to their website. So just to let you know, because I get a lot of questions, like when do I register? So this will show you everything. Okay, I know I'm going to have to go back through the sign-in process. Okay, we're patient people. Yes, let's continue reading. It'll take me back to the old page, even though I input 3. I keep doing it anyway, wishful thinking. Okay. Whoops. Okay, well, I want, that looks weird. Adverse opinion, then figure 12.6. Again, formatting issues in this book. They don't set their figures and tables off very well in the book, at least in the electronic version. They do a better job of the printed version. So here we have a letter regarding significant deficiencies in internal control. And by the way, material weaknesses would be reported in the same type of letter. Now, this letter, there is no standard language for it. So it's not something we find in the auditing standards as far as language goes, not like the audit report. We're told about the content in the auditing standards, but the actual wording is up to the individual auditor. So different auditors can word this slightly differently. I know that this one here came from PPC software, audit software that is, and in PPC software, it contains samples of these letters. So with these samples, which are in template form, you just edit that template for your individual client there. So let's see. This one's from a CPA firm up in Troy, Michigan, to be sent to the audit committee of the Airtight Machine Company, also in Troy. By the way, I used to have a student named Troy, who was from Troy, yes. Just like Evan from Evansville. Oh, I had Cody from Cody, Wyoming. That was another one. Yeah, when I first came here. Alliterative names. Yeah, Troy. Does anybody know where Troy is? It's just West Detroit. It's a fairly nice suburb. It's okay. But the company that used to be based there, although they moved their headquarters a little bit away, was a very famous one. Well, I should say still is. It is Kmart. And I just read yesterday that the last Kmart closed in its home state of Michigan. Yeah. So the end of an era. So if you wanted to go to Michigan and shop at Kmart, you're out of luck. In fact, I'm not sure where you would be in luck. Look up the locations on their website, but there won't be many left. Darned. Can't go in and get, well, you know what this is? The blue light special. Yeah, they finally revived those, at least for a short time. It's a marketing promotion, but the blue light special was originally if you were in the store and they decided to mark something down. One time I remember I was in a Kmart and they marked down Easter candy. Well, so here all these people went up to get their Easter candy. And there was an actual blue light. It was a flashing light on a stand so you could see it. And the person manning the blue light special would wheel it over to wherever this special was going to occur and turn it on. Then there would be a big announcement in the store and people would get excited and traipse on over to the blue light. Okay, so usually it was something that, you know, they were really trying to clear out there. So I don't know if anyone's ever heard of this. If somebody has something that looks cheap and not well made. Have you ever heard someone say, was that the blue light special? So it's a really catty comment. Yeah, used to be more popular when Kmart was still around. So darned, you'll never know blue light specials. Yeah, Troy's just west Detroit. Troy has a heavy Polish population, by the way. Polish tend to go to industrial areas for jobs. I'm in a couple of Polish restaurants in Troy. They're very nice. So let's see what this says. Again, bear in mind, there's no standard language, but there's enough common ground from one CPA to another that these are pretty simple. And if you use PPC software, there's probably going to look like this. It'll contain some familiar language for us too. So in planning and performing our audit of the financial statements of Airtight Machine Company, as of and for the year ended December 31st, in accordance with auditing standards generally accepted in the United States of America. And by the way, with that statement, we know this is a privately held company. And after all, too, a publicly held company would have a 404 report, which this isn't. This is privately held. Well, we considered Airtight Machine Company's internal control over financial reporting, or internal control, as a basis for designing audit procedures that are appropriate in circumstances for the purpose of expressing our opinion on the financial statements, but not for the purpose of expressing an opinion on the effectiveness of airtight machine companies and internal control. Accordingly, we do not express an opinion on the effectiveness of the company's internal control. That's another way we know this is a privately held company, someone who is not an issuer, because that opinion would have been in a 404 report that would only be given for an issue. So for a publicly traded company. Of course, for a publicly traded company, guess what? The audit bill is going to be a lot higher too. It talks a little bit more about what they did. So our consideration of internal control was for limited purpose described in the preceding paragraph and was not designed to identify all deficiencies in internal control that might be significant deficiencies or material weaknesses. There are those terms. However, as we discussed below, we identified certain deficiencies in internal control that we consider to be significant deficiencies. So no material weaknesses, but there are significant deficiencies, somewhat less dangerous, but we still have to report reading between the lines. So then they define things. So a deficiency in internal control exists when the design or operation of the control does not allow management or employees in the normal course of performing their assigned functions to prevent or detect and correct misstatements on a timely basis. Then a significant deficiency is control deficiency or a combination of control deficiencies that adversely affects the entity's ability to initiate, authorize, record, process, or report financial data reliably in accordance with generally accepted accounting principles that is less severe than material weakness, yet important enough to merit attention by those charged with governance. And we consider the following deficiency to be a significant deficiency in internal control. And here's what's wrong. There's a lack of independent verification. We know that we always need that. It must be independent or a separate duty, somebody checking over something. Of the key entry, that means we have a data clerk there who is keying in information, just typing into the computer on a keyboard. Of the customer's name, product number, quantity shipped, prices used, and the related mathematical extensions on sales invoices and credit memos. As a consequence, errors in these activities could occur and remain uncorrected, adversely affecting both reported net sales and accounts receivable. And the deficiency is significant because the average sale, the large size, pardon me, of the average sale of the airtight machine company. So here are these big sales. We have a data entry clerk who is keying this stuff in. So just entering data on a keyboard in the computer. Nobody is checking over this person's work. That's bad. First of all, it's very difficult to find errors in your own work. It's just like proofreading your own work. So somebody should be independently checking this. The other reason is that a data entry clerk, do you think these people are paid? No. And they may not realize the significance of what can happen if they do something wrong. Or worse yet, they may not do it. Especially in today's environment, because how difficult is it to get quality employees? Very. So you might have somebody sitting there at that computer who is new. They don't really know what they're doing. And again, they just do. They're thinking about, oh, it's getting close to 5 o'clock. Gotta get out of here. So, and actually, as you get closer to something like that or closer to lunchtime, some employees make more errors. They really do. Because their mind's getting off the board. Yeah, it's almost 5. I'm gonna go home and drink a beer. No, I won't. No, I rarely have anything to drink. I'm not a teetotaler, but I'd never like to drink much at all. Just really haven't. I guess I should consider myself lucky because some people really like doing it. But I'm sure never on this campus, correct? Never, because we have an alcohol-free campus, correct? There will not be any alcohol here. Good. Sorry. It is not. And that's a good question. There's been talk of making a tobacco-free campus, but it hasn't been done. Correct. Unless you're too close to it. Yeah, or maybe too close to twos and smoke wafts over there. Yeah. By the way, on student trip, I went to Cuba in 2015. I did not know. But all the students, except one, actually smoked cigars. They bought some of them. Although I'm looking at it didn't smell as bad as cheap cigars you were part of this. To a cigar factory and saw them hand rolling cigars. Of course, they had a gift shop at the end. You could bring back $100 of merchandise so they could be able to have packages of cigars for $100 and for $50, a smaller package. And they were just in Ziploc bags. You know, nothing fancy, but then again, in Cuba, you don't have a lot of materials to work with. I'm sure they didn't produce Ziploc bags. Well, another myth. The U.S. does not sell Cuba anything. We do, plenty. So I found out when I went into a more upscale grocery store there, they only accepts hard currency. Yes, plenty of stuff coming from the United States, including Heinz ketchup, labeled Pittsburgh, Pennsylvania, made in USA. Also, we sell them a lot of chicken hindquarters, dark meat. So in Cuba, you get a lot of thighs and legs to eat. There's some US law that prevents the exporting of white meat to Cuba. Strange, but true. They said that if they get white meat, they know it came from Canada. Now, this begs the question, why don't they raise their own chickens in Cuba? I have no idea. Isn't enough raised? Maybe they just can't stand the thought of having to decapitate those poor chickens. Well, then, this last little bit, they're going to restrict distribution of this. So this communication is intended solely for the information use of management and the board of directors, and is not intended to be and should not be used by anyone other than the specified parties. So keep it to yourselves, in other words. So any questions there about that one? Sense? But then just recalling a little bit of information from the 404 report. We know that the auditor's 404 report is required for SEC clients. It's going to include the following: the auditor's opinion as to whether the company maintained all material respects, effective internal control of financial reporting as of the specified date. So again, we get a second opinion. In addition to that, all opinion on financial statements drives up the cost of the audit. And then that Public Companies Accounting Oversight Board, they have just a few of their own standards. But standard 5 requires reporting all material weaknesses and significant deficiencies in this 404 report. Thus, it ought not be designed to detect deficiencies in internal control, which are individual or in the aggregate, that means the total, less severe than material weakness. So don't sweat the small stuff. And the 404 report may have an unqualified opinion, a qualified opinion, a disclaimer of opinion, or an adverse opinion, as we've seen before, just like in an audit report on financial statements. And pages 386 through 390 contain some more information. And information technology is covered in AIS. Worried about that since you have it in another course. So look up to the culture here in a moment. But first of all, do you have any questions here on chapter 12? Straightforward. Okay, good. Let's see. Children. Google something. That will be the Florida inmate population. Inmate search. There we go. Okay, let's go. Florida Department of Corrections. Let's find out. Oh, maybe there's no T. There we go. We can find her under inmate population search results. Okay. Then we see, okay, there's information about her. Whoa, she's not to be released until 2029. She's up in the Hernando Correctional Institute. Okay. She was born in 57. Look, her birthday's later this month on the 27th. Is that Thanksgiving? No, 2 days after. Okay. So should we send her a class birthday card? Yeah. With love from our auditing class. Pardon? Oh, okay. I guess we could just take a blank sheet of paper on. She does, doesn't she? Does she look like fraudster? No. Of course, she had criminal. Yeah, she does look like a criminal. She probably is. Pardon? She's doing the time. Yeah, can you just imagine? Yes. Oh. Yeah, yeah, she's up in Hernando County. At least she's in minimum custody. They don't think she's going to run off. I don't think she would either. Yes, we can found a visiting request form and help to apply for visitation. We could go visit her for her birthday. And by the way, last night I was on, oh dang, I can't remember the street, Palmetto Street by the library. And the little convenience store that she used to go to buy her lottery tickets is being torn down. So, yeah, if Julie knew, I'm sure she would be heartbroken. I'm sure it's bad enough on her that she can't buy lottery tickets in G. Guess we want to give her a present, we give her a lottery ticket, a scratch off. That's what she used to use. Oh, did you? Oh, I'm sorry, Anthony. Yeah. I'm sorry. Yeah, exactly. Ooh, and if it's a winner, then she can't get the story cashing in. Ooh, ooh, that would be so cool. Oh, oh. That's impressive. Yeah, by the time she gets out there, she'll be 72 years old. Well, not quite 72. So, hang in there, G. But yeah, she really does look like grandma. And she doesn't have a bad look on her face. It looks like she might be kind of smiling. As best one can while in prison. That we see how a lot of fraudsters do fly the radar. I mean, she just doesn't look the part. She's been there for years. She's highly trusted. Like I said, I had talked to her home schedule my son's sleep. She was very pleasant, very efficient, and she didn't sound like fraudster. So, well, lo and behold. By the way, another thing that is being torn down. You've been through the booming metropolis of Yeehaw Junction. Pardon? Yes, the turnpike's right. Remember the Desert Inn? Yes, it's a triangular shape. Well, as I drove up to get on the turnpike, I noticed there was a fence around it, a chain link fence. And I thought, what's going on? So then I saw that in front of the Desert Inn, it was being torn down. So I thought that was a national school. And back in the early days of Florida, that was a one shot does all place for cattle drivers. But yeah, I thought it was national school landmark that I don't know, maybe they can be torn down under certain circumstances. But I always thought that was a creepy place whenever driving through Yeehaw Junction. So, that slowly over the years they've been deteriorating. I guess in Yeehaw Junction, there just isn't a lot of business. But pretty soon we will have no more Desert Inn. The Yeehaw Junction, that's one place that people always remember. That's true. Mm-hmm. Oh, and also, as of 2 a.m. on Monday, right? 2 a.m. Monday, yes. The Florida Turnpike system is no longer collecting cash. So it's either SunPass or toll by plate. So why do you think they're no longer collecting cash? What are some of the reasons? Definitely a lot faster. I remember back in the days, the old days for SunPass at Yeehaw Junction, sometimes that line going from the turnpike into Yeehaw Junction would back up a great deal. Take you a while to get through. Yes, Antoinette.
So what would they do for out of state?
Toll by plate. Yeah, so I guess it works for out of state people. I don't know. Yeah, it's been what? It's 2015. I drove over a bridge in Vancouver in British Columbia, and it said if you don't have whatever their counterpart SunPass device was, that they would bill you, so toll by plate. But I was driving a rental car with a Washington State license plate. So maybe they can't do that across countries because I never thought of it. Yeah. So with our Canadian silvers coming down, I don't know. The border is supposed to be opening back up. But that's a good question. Can we now do it internationally? Otherwise, be a lot of lost revenue. And they were advertising SunPass devices are available At the rest stops on the turnpike. Like US 27, we go all the way over to 95. Yeah, I've taken both those a lot too. But yeah, why else do you think they went cashless? Why? Laid off a bunch of workers who did that. Exactly. May have been stealing some too. May have had their hand in that too. Yes. Plus, this way they don't have to handle money. Awesome. Instead, it's all done electronically. And if you're someplace like Lehigh Junction, there is no bank. So, gosh, that was probably one of the main employers in Lehigh Junction. That and the filling stations. Desert Inn's no longer an employer. So, Lehigh Junction, maybe they're suffering a little depression over there. Maybe some people will move out there. Always wonder about people live there. Each to their own. All right. Well, that's what I've got for you then today. I'll declare the rest time lab time. Have a good weekend, and I will see you on Monday. Bye-bye. Thanks. Thanks. You do the same. Take care. Bye-bye. Bye-bye. Have a good one. Thanks. You do the same. Yes, you too. Bye-bye.
See what